Hey everybody, Chuck Barone. Wednesday, February the 15th, 2023, and a big twisty turn in the economic picture to talk about today, guys. As always, want to welcome you guys to the show. Thank you for your support. We appreciate you guys and the time you take watching the videos and being part of this every day. We're truly grateful. Markets today. Well, we know the big news of the day we were waiting for was the consumer spending number. It came in and it was a whopper, way more than the market expected. Now, of course, that changes the entire narrative. And as we've been talking on the show, this is a day-to-day market now. There's no real direction to this market. It's just driven by day-to-day events, the news of the day, and this is the news of the day. But the market actually, after a choppy day, ends up with small gains today. Surprising. The Dow up 38 points, S&P up 11, NASDAQ up 110, so a little even some speculative stocks, tech stocks getting some interest today. A surprising result for the stock market with this consumer spending number. I guess, good consumer spending is good for the economy, it's good for business. Not so great for inflation, however. So we'll see where this all leads, but a lot of uncertainty now in stocks. The bond market today, kind of a mixed market. Yields climbing on the 10-year. 10-year up 5 basis points, 3.81%. The 2-year basically sitting flat, 4.62%. Further narrowing the spread now on this inversion. Just stronger and stronger signs from this bond market every day that we got a recession coming in the future, and it just seems like it's going to keep getting deeper, because the story goes, the deeper the inversion, the deeper the recession that follows. We haven't had a 100 basis point inversion since 1981. Looks like we're on our way to that or somewhere very close to that. Not great tidings from the bond market. The dollar today up, not a surprising thing. 103.87 on the index, so up small, not a real meaningful move, but the dollar holding strong. As a result of that, we know dollars and metals moving inversely. A strong dollar, weak metals. Weak dollar, strong metals. Well, with the dollar tightening up today, metals down. Gold down $15.50 an ounce at $18.38. Silver down 18 cents per ounce, $21.64. Still fair numbers for metals right now. Still fair numbers for gold and silver. I really still see a rally coming. Obviously this is very dependent on, the data we're going to be getting, and tomorrow is going to be now turning into another big data day. So we'll keep an eye on metals, and of course we report this stuff to you guys every day. Oil today down small, 42 cents per barrel. It's sitting at $78.64 per barrel at West Texas Intermediate. Oil sitting in its 75 to 80 trough, just lagging there, which is okay. Gas prices, if we can get them to stop rising, stay where they are, I think people are okay with where prices are now. Would like to see them cheaper, obviously, but no big spikes in oil, no big spikes in gas prices. Bitcoin today, big up day, up $1,855, breaking back above $24,080. Nice rally for Bitcoin, showing real strength here, guys. This is a big move, and it's way 50% higher now off its lows of just a very, very short time ago. Big moves for Bitcoin. Market news today, you guys need, the news, guys. We talked about it yesterday. The report we were waiting for today, the consumer spending numbers. As you guys hopefully know, we've talked about it on the show before, consumer spending representing 70% of the U.S. economy, or just about 70%. Consumer spending spiking 3% in January, big number. Biggest increase in consumer spending in around 2 years. Last month, actually the last 2 months, but last month especially, consumer spending down 1.1%. Kind of, go figure, buoyed the market up, because they figured here comes the recession, a chance for the Fed to pivot. It didn't work out so great. The forecast was for spending to be up 1.8%, so this blowing that forecast away. So now, What does this tell us? Well, it brings to mind a few questions for me. The first question, the obvious one, is where in the heck is this money coming from? Are people draining their savings account to do consumer spending? Are people borrowing more money to do I guess it's likely a combination of savings and more debt. I just would like to see the percentages there. We know Americans had a nice glut of savings from the pandemic era and the government assistance checks they all received. People were tending to stash that money, now spending it down, savings rates dropping, savings account balances dropping, consumer spending stays high. Good stuff. Another question, okay, so with this data, and in yesterday's CPI numbers, well, how much pressure does this put on the Fed right now to actually probably raise rates higher than their previous stated terminal rate of around 5%? This CPI showed us that inflation numbers are staying kind of persistent here, right? This now telling us, in spite of this inflation, consumers are going to spend money. I think, in my opinion, it puts a lot of pressure on the Fed. If maybe not to raise rates higher than what they had projected for their terminal rate, another half point or so before they're finished, I think it's going to prove that rates are going to stay high longer. I don't see a pivot coming this year. I just don't see it, especially with the numbers the way they're coming out right now. Also brings me to mind, so now tomorrow we know we're going to get the unemployment report. It makes that number now even bigger than it was earlier this week because we know the components that drive inflation, at least what the Fed believes drives inflation. Employment's the biggest thing on there, of course. This surge in consumer spending is pretty inflationary too. So now this is really going to start, this just puts a ton of pressure on the Fed. So what do you think, guys? Do they get more aggressive? The market now, starting to price in, the money markets, futures, pricing in at least another half point. So they're looking at now a terminal rate, 5.6%. Deutsche Bank came out today predicting the same thing. New terminal rate, 5.6%. Well, guess what, guys? That's a full percentage point higher than where we are today. I think now, you could see another half point bump coming, depending on, the data we get between now and when that open market committee convenes and announces. I think, this just changes the whole game in one day. And tomorrow's data on unemployment going to either make it stronger or weaker. We'll see. We'll be here to talk about that and put all of this stuff together for you guys. A little bit of good news for the economy. Manufacturing starting to pick up a little bit. Factory production rising 1%. The survey also showing that manufacturers are feeling a little more upbeat about their prospects going forward. Manufacturing never did get into recession. It's been kind of lagging, like right at that borderline between growing and shrinking, right? But a little bit of good news on manufacturing in this country is always a good thing, at least in my mind. So nice to hear that factory production picking up, although not a surprise with consumer spending spiking the way it did today. Now, these markets, guys, we talked about this a little bit yesterday. Just remember, if you're in this market for the long haul, you're not trading every day, you're not trading even every month, but you're making solid investments into good companies in your 401k, your investment portfolio. You're typically holding those investments, not in and out trading futures options, making, frequent trades on stocks or funds. You can ignore the emotions of the market. It's amusing to watch it every day because I'm certainly no trader. I don't really have that kind of mentality. I like to start a position and build it, not be in and out of positions as frequently as a lot of guys are in this market. But watch these signals, guys. We talk about, on every Monday, I give you guys the data coming for the week. So if you're trading, that data is important to you because it's going to tell you, we knew we had a big report coming today. We knew consumer spending was likely going to go up. Of course, we didn't know how much it was going to go up, and it shocked the market. I think that all of this uncertainty creates some opportunities for traders, but it creates a lot of peril, so be very, very, very cautious. This market now, there's just no real direction to it. It's being driven by the events of the day. So if the events, and it's not even really the events of the day as much as it is the interpretation of those events. So if it looks like the events of the day, this consumer spending number, it certainly puts away the idea of an impending recession, right? So now the bond buyers who've been buying bonds, hoping for a recession where rates come down and those bonds get gains, now they got to reconsider their positions. People who've been dumping stocks, seeing a recession coming, especially tech stocks, NASDAQ stuff, now reconsidering their positions. Fascinating times, fascinating stuff we're living through, guys. This is history. So take the time to really appreciate the times we're living in. I know they're frustrating and crazy. Try to make it something that doesn't affect you day to day, other than being the amusing little thing it is. It's certainly much more fun than watching any funky soap opera or nighttime drama. This is real life stuff, but it just has all the aspects of a play or a friggin' story that's made up. But we're going to be here every day to bring it to you guys, for the good or the bad. We'll be back again tomorrow. That's wrapping it for today, guys. Tomorrow we got unemployment numbers and some other data. It's going to be a fascinating day to watch and see how this market reacts. If employment comes in super hot, guys, again, the whole equation is going to continue to change. We're going to be here to put it all together for you. Until we talk again tomorrow, take care. Thanks.